What is Forex analysis, and how does it vary? In this presentation, we will briefly discuss Forex analysis and its two major variations. Forex analysis is the process of determining whether to buy, sell, or wait on trading a currency pair. Technical and fundamental analysis are its two primary variations, with many traders using a blend of both approaches. Fundamental analysis involves assessing the economic health of a country, and by extension, the currency. Fundamental Forex traders use macroeconomic data points such as the country's inflation, employment levels and even their central bank's benchmark interest rates to determine the strength of a particular currency. By assessing the relative trend of this and other data points, a trader is analyzing the health of the country's economy and whether to trade the future movement of that country's currency. Technical analysis involves the study of historical price action in order to identify patterns and determine probabilities of future movements in the market through the use of technical indicators and other analysis tools. Technical traders look for price patterns which they use to determine entry and exit points. Fundamental and technical analysis involve very different strategies and approaches to trading, offering unique value and insights to support trading decisions, and when to enter or exit a trade. While some traders prefer to use these types of analysis separately based on their preferred trading style and goals, many use a combination of the two. That concludes our presentation. Thank you for watching to the very end. Subscribe to our channel for more videos where we simplify finance. And in closing, consider these words of advice: no matter how much experience you have, there's always something new you can learn and room for improvement.